Inflation continuing to hold up, and of course, all of this is happening during the SpaceX week. We'll talk about that. It is out of control, guys. But before we get started, a word from our sponsors. I want to thank our sponsor today, and of course, that is Uphold. If you are holding crypto right now and not earning rewards, you're essentially leaving money on the table. And the reality is, in today's market, you need to be able to move instantly. That's why Uphold's flexible staking is such a game changer. You can earn weekly rewards automatically on assets you already hold without a lockup. That's most important. You can sell anytime. It's the perfect setup for anyone who wants to grow their holdings without losing their exit strategy. Download the Uphold app today and try it for yourself. Let's get into it today. I want to start off with TED Pillows. And I love this. I love TED Pillows just because I love the X account. Cracks are appearing, and of course, big players going risk off. The real capitulation did not happen yet. I agree with this 100%. We are in, I think, denial phase. I would agree with what we're hearing from a lot of his commenters is that is the phase that we're in right now. I want to go to a clip here that kind of goes into where the situation is around SpaceX, because this will start to put some pressure, I think, on the market. Take a look.
SpaceX's IPO is almost 4 times oversubscribed, and sources have told Reuters it's drawn more than $250 billion of investor demand.
As far as the expectations and the hype for the IPO, I do also think that 4 times oversubscribed number, a lot of that has been driven by the hype that has been driven by the book runners, by Elon himself, and by the media in just drumming up interest in this. So nobody expects to get their full allocation, so they probably bid for more. And some admittedly think the valuation are extraordinarily high and perhaps extreme, but want to just be a part of the action, a piece of the action, knowing perhaps that small amount that they do get allocated will not make a big dent in their portfolio. So I think there's a lot of speculation going on like that. Where is it coming from? Maybe from Bitcoin. We'll probably see some pull away from that, but that tells you something. If that is coming away from Bitcoin, arguably the most speculative piece in an asset allocation today, the piece that has no history as to how it performs, that's the money that's going into the SpaceX IPO. I think that tells you investors are not treating this like any other equity.
All right, so just to kind of comment on what she was saying there, a little bit of pushback. I think that this is actually coming maybe from the broader market, and it could maybe not necessarily the top or the Mag 7, but definitely within a lot of companies that people have already taken profits on or are looking to take profits on. Bitcoin may have some of this in terms of liquidity injection into SpaceX, but I think all of this is still the broader markets supporting or getting ready for what will be a major launch on the SpaceX IPO. So much so that Senator Warren comes on and says she just called the SEC to block the SpaceX IPO. Her reasons, she cited 3 concerns: unchecked control over the company, governance risks on public investors. That I definitely agree with there. I'm not agreeing with Warren, but I agree that they shouldn't have changed all these rules to where these, investment funds automatically invest into this, and you have no choice or option to not do that. And the possibility of Chinese investment in a company that's one of the biggest and most critical defense contractors. That's a big factor here. I would like to know more about that. I'm not aware of major Chinese investment, but I wonder if there is something brewing there to kind of go around to where she's talking. I want to go to the clip where she breaks down this warning letter to the SEC.
Elizabeth Warren, in this letter, citing a number of factors she says warrant a delay in the IPO, including the company's valuation. She says market analysts have raised concerns about the math underlying SpaceX's target valuation. She raises concerns about governance structure, saying publicly traded companies are meant to be accountable to their shareholders. The SpaceX IPO will flip this model on its head. The SpaceX IPO creates a new concern that major stock market indexes are being rigged in a way that would force millions of investors in passive index funds, a generally lower cost investment option that can be attractive to retail investors, to invest in SpaceX and face exposure to SpaceX's significant risk with no choice in the matter. So that from Elizabeth Warren. The political reality is that Donald Trump's SEC not likely to take Elizabeth Warren's advice here on this IPO on Friday, but I think it does signal some concerns out there in the investing community. And if Democrats are to be successful in the midterms, it could precede some static for the company after November. Guys, back to you.
I mean, these indices have spent a lot of time thinking about what they should do and what they shouldn't do. And the idea that it's rigged, I think, is a very strong word. I hope you agree with me.
All right, guys, rigged, I think, yeah, you have to look at just the modifications that were made to allow this IPO to happen under these new rules and guidelines. There's been a lot. I definitely, when you look at the funds that will have access to this, that is the concern. The other thing that's happening, though, is the fact that we're seeing this spread across a lot of different varieties of markets, and that is including a 2x SpaceX ETF now launching the same day as the IPO. Man, talk about people piling on. This is going to be most likely just the first of many different programs launching around this. And not only that, let's look at this. The deadline now to submit your IPO, a SpaceX IPO share request is now changed to today at 4 p.m. And that is coming in for Robinhood users. Just remember that there is that 30-day cycle thing that puts you into a little bit of a situation where you can't get into another IPO if you cycle a share. Meaning you buy it now and sell it before 30 days. So just be aware of those kind of rules that are out there if you are participating in this. First of all, just let me know, are you guys buying the SpaceX IPO? Just yes or no down in the comments. I'd love to see where the audience is going. X stocks, though, now launching. The X Stocks Alliance member, Big Get Wallet, now with their successful SpaceX X Stocks, which is called SPCXX, all out there and available. Again, these are what I think is a frothy situation around SpaceX that unfortunately I feel is going to be a bad situation for retail, and that is a pump and then most likely a pretty significant dump. But we'll see how it plays out. Franklin Templeton is talking about how they're going to participate. Let's know what they had to say.
So what happens if this IPO goes well, if it doesn't go well?
The investment bankers do a great job at really managing the price and the demand. And so I'd be surprised if this didn't go off well. And we've been investing because we have both venture and we've been doing late stage venture in our growth equity funds for over a decade. So we actually already have exposure and we will participate in the IPOs.
And
I'm hearing, there's retail. Yeah, you can get in. I don't believe it.
I'm not sure what she's been looking at, but if you look at the past biggest IPOs in the past, Airbnb dumping, Rivian dumping, Coinbase dumping, Snowflake dumping, Uber dumping, Figma, they're all dumping. So what would make you think that this one would be different in terms of them going out into the market, especially with the amount of froth that this could go? Sure, we could see a little bit of a move, but that move most likely is going to compound the investments in these, and people will take profits and they're going to get their funds back from their investments that they made in these early stages into the company and take their profits and billions away from the retail investor. All of that, though, is undershadowed by what we continue to still see as the biggest market presence in the entire market, and that is what's going on in Iran. Iran's military is now, according to Trump, is a complete and total mess because they have been completely defeated. They don't want to talk. They don't want to deal. The bully of the Middle East is dead. This is the kind of stuff and the rhetoric that we continue to see coming out of Trump. I don't know, this guy, is anybody listening to Trump anymore? Because there's so many promises that have been broken here. So many promises that have been said, we got a deal, we don't got a deal. I think it was 30 plus times. I don't see how anybody has taken it serious, and being able to negotiate this out is going to be critical going into the midterms. I wonder what he has up his sleeve if this continues to go sideways and we continue to see the problem of inflation, fuel prices, and all of that. Well, Arthur Hayes thinks he has an angle on this. Take a look.
This oil and commodity inflation has been building through the supply chain for months. You can't just stop it. And so inflation is baked in. There's not really much you can do about that situation. So I almost think you got to kitchen sink the affordability issue. So if you can't really do anything about that issue, what's the next thing that people care about? And I think that they probably care about this more because, yes, if a price of good goes up 10%, but you have a job, okay, it's bad, but you still have a job. If AI takes your job, you have no income and shit's going up in price. So what are you afraid of more? The AI taking your job or the inflation? Rich and poor, red and blue Americans are scared shitless about AI.
I don't know that Trump would pivot on using an anti-AI approach. And I get that maybe Hayes is thinking that there's a lot of people that are concerned about it. I don't know that that is really the case. I think people are aware of it and are concerned about it, but I think they're more concerned about price at the gas pump. They're more concerned about price at the grocery store. Those are the kind of things that are going to be front and center coming midterms. I don't think Trump is going to have any way that the midterms are going to get salvaged unless he gets an off-ramp and gets out of Iran, or at least gets the Strait of Hormuz open. I don't know that we're going to see this. And remember, there was also just a recent tweet from Trump saying that the U.S. government is now going to take a stake, much like they did with Intel, into some of these AI companies. So why would he be anti-AI if they're actually trying to build a stake in those companies? I just don't see that as being the case going forward. If you look at the rate hike situation, which is the concern I have right now, you've got a 52% rate hike right now on December. If you look at the October data, it's hovering in September around 32%. Then you go to October at 70%. But December, still likely a good large opportunity here for a rate hike. And you can kind of see it right there, 39% holding right now. Even though we had spiked up to around 51% on June 8th, just earlier this week. So this is the real question. Will Kevin Warsh put a rate hike in play? Because if he puts a rate hike in play, where would crypto be at that time, especially if we are not out of the Middle East and we continue to see inflation flaring like we are right now? I want to go to Cudmore real quick, Mark Cudmore, because he gets into the whole inflation situation as it is. Take a look.
Friday's jobs print changed the game. I mean, that was a very, very strong print. And it really, jobs is the one bit that people are nervous about that will kind of prevent the Fed from being backed into hiking rates. So now with that CPI print coming on the back of that jobs print, if we do get an upside surprise today, which is very likely, there's real kind of sensitivity in this market. Now, what's interesting is we've priced in such nervousness since Friday. I actually think there's probably two-way surprise risk now. I'm not sure it's quite as asymmetric as I would have said maybe a few days ago. And I reiterate, my narrative for the Fed is either they're probably on hold or they hike multiple times. Because I think by the time they get forced into doing a hike, that means they are acknowledging they're behind the curve and they'll have to go multiple steps. So it's a little bit binary on the rates path as well.
All right, so I hope you guys heard what he's saying. He's talking about hikes of multiple times, and what they're saying, or what he's saying there, is that they could be behind the curve on where this is heading, at least from an inflationary standpoint. Other issues that this could affect, of course, is the risk markets, because as we see rate hikes, typically what we have seen in terms of crypto is that causes crypto to go down. Pompliano talked about this today.
And so if you go and you look, if there's not going to be interest rate cuts, obviously that can serve somewhat as a headwind. But I think that just because we don't get interest rate cuts doesn't mean that the government's national debt is not going up, or that there's undisciplined, kind of fiscal policy. And so ultimately what I believe is happening here is there may be some short-term headwinds because people aren't going to see rates go back down to 0% as we saw over the last few years. But I do believe that people still are very long-term convicted that the government cannot stop printing money. They can't stop printing money. They're going to debase the dollar. If the dollar gets debased, then you're going to want to own assets. Assets like Bitcoin and gold are going to do very well over a long period of time. And so I think that an entire generation woke up to that fact during COVID. They now are convinced, and there's pretty much no data point you're going to show them that is going to convince them otherwise.
I think that what Pompliano is saying, in general is right. And the key words that he was talking about there is long term. Okay. The issue is what happens to the markets in the near term. And the near term will be correlated heavily to rate hikes. If rate hikes do occur, you will see pain in the risk markets, and Bitcoin will probably be one of the big ones that leads the way on that. Now, he talked about further in this same commentary is this the right bear market for you maybe to get into crypto for the first time? Take a look.
And so peaking in October and drawing down now, that would line up with that 4-year cycle. But one of the things that we have seen is that this is one of the best bear markets. And usually you don't want to celebrate when an asset is going down. But what we have seen is that we are starting to hit a number of metrics that historically have actually signaled we're near the bottom of a bear market. But it's doing it without the 80% drawdown. Now, Bitcoin is still down 50+%. And so it doesn't feel good for the people who are holding Bitcoin. But I do think that these bear markets are getting shallower, which also means that the volatility overall of the asset are dampening. And a lot of that is because you have the institutional participation. If you go and you look at Bitcoin itself, one of the things that I think people are starting to talk about, there's a guy, Benjamin Cohen, who's come out and said the percent of Bitcoin that is held that is underwater is now larger than the percent of Bitcoin that is held that is in profit. And that usually is a pretty good signal that we are near the bottom of a bear market. And so I think that a lot of the Bitcoiners are starting to say, okay, it's drawn down enough. I'm going to start accumulating now.
So I think that accumulation most likely is occurring and probably will continue to occur, especially around the 60K and below. But the question marks right now are still centered around inflation. We're, of course, dealing with what could be the macro headwind of a century in terms of energy and what's going on in Iran. And then I think you've just got this whole issue that is really facing the crypto industry around clarity. So there's just so many things that pace this out. And lastly, if you consider how mostly institutions have been one of the big accredited components of really propping Bitcoin up to its all-time high of 126K, if they're not participating and they're willing to step away and wait for that volatility, especially a rate hike, I don't know. I think we could see a much lower market. Yes, that's a continued bear market, but it does open up an opportunity, I think, for a lot of these to get in position. And remember, the S&P 500 is getting ready to face one of its biggest headwinds yet with what's going on with SpaceX. So there's a lot going on in the market. We'll continue to cover it. If you like this video, hit like and subscribe, drop a comment down below, and also join our free private member group. The link is in the description.